Welcome back to Wealth-ology. For today's video, we will be going to talk about the scary reasons why Warren Buffett is selling out his stocks. Let's get started. One of the most crucial things we advocate is keeping track of billionaires' investor portfolio. What stocks are they planning to buy? What kinds of stocks are they selling? Why are they acting the way they are? We've been looking at Warren Buffett's recent portfolio, dubbed the interesting GOAT. Berkshire Hathaway, the world's largest investment firm, is now under Warren Buffett's control. We can see from their portfolio that they've been selling a lot more than they've been buying. In the most recent quarter, they sold or decreased 11 stocks. They also purchased/added to only 9 stocks. This is a fascinating topic. He completely sold out of his position in JP Morgan. Pfizer has sold all of its shares, totaling 3.7 million. PNC Financial Services has sold all of its shares, totaling 1.9 million. He no longer owns or has sold any shares in this bank. The gold mining company Barrick Gold Corporation was the last one in which he sold his whole stake. Currently, I'm quite interested in the transaction. That's something we'll talk about later. But let's continue down the list. Suncor Energy was sold for 28%, Liberty for 10.2%, and General Motors, the world's largest vehicle manufacturer, was down 9.38%. Apple, that's an intriguing one. In recent years, he has made a lot of money on Apple stocks, but he certainly sold out of 6% of his holdings. US Bangkok 0.6% was the last stock he sold off of, with a total of 823,000 shares. Now, Warren Buffett, those of you who know him, is normally against selling stocks. That's why he says, our favorite holding period for stocks is forever, aka never selling them. However, his most recent papers show that he's been doing the exact opposite of what he enjoys. And as you can see, these aren't tiny sells. They're not 1, 2, 3, or 5% drops in the equities he owns. They're massive reductions. JP Morgan, Pfizer, PNC, M&T Bank, and Barrick Gold were all entirely sold. He sold 58% of his Wells Fargo stock and 285% of his Suncor Energy stock. So the fundamental issue we should be asking is why he is selling so many of his positions, especially the financial industry. PNC Financial Services, JP Morgan, Wells Fargo, M&T Bank, and the United States Bank Corp. All of this, apart from US Bank Corp, he dramatically reduced his positions in. He completely sold out of the majority of them. Buffett usually favors the banking industry. What has changed since they brought the bank stocks a few years ago? The first is the current economic situation. With all of the debt, free money, and low interest rates that we observe, many investors are concerned about a new Great Depression as a result of a variety of factors. And as happened during the last Great Depression, most banks failed and had to close. In fact, during the previous financial crisis, Buffett had to bail out Goldman Sachs with a $5 billion bailout. So it is fair to argue that over the next 5 years, especially if we see though economic conditions, banks could struggle. This could be exacerbated by the proliferation of online banking services such as PayPal and Square, as well as the growing popularity of pure online banks like SOFI. These and possibly other factors may explain why Buffett is selling bank stocks in large quantities. But don't forget that Warren Buffett is what's known as a value investor, an investor who looks for cheap prices relative to actual value of stocks. And you could argue that right now, the valuations of stocks are the opposite of what a value investor likes. A value investor likes low prices, and right now prices are high. Look at the S&P 500 PE ratio. That's 40% more than double the average over history of 15 point. The Shiller PE ratio is 35.7%, way higher than what it was in the last financial crisis in 2008. Even the Warren Buffett indicator, Buffett's primary method of determining market valuations, is currently at an all-time high and 189.5% higher than both the 2000 technology bubble, the 2008 housing bubble. Prices are high. Looking at the primary indications, it's difficult to argue otherwise. Warren Buffett learned the foundation of his investing strategy from Benjamin Graham, aka the godfather of valiant investing. And Benjamin Graham says this about buying and selling stocks: buy when people, including experts, are pessimistic, and sell when they are actively optimistic. When it comes to equities, many investors are now highly hopeful. Look at the high pricing companies like GameStop and the prices at which these IPOs are selling. They're hopeful. And Buffett may simply be following the advice of his former mentor and selling while the market is positive. But the other thing that we have to look at when trying to understand why Buffett is selling is the economy and the performance of businesses. So, if we compare today's economy to what it was during 2019 and the start of 2020, it's down. GDP is lower than what it was in the third quarter of 2019. Same with the fourth quarter 2019 and the first quarter of 2020. It's decreased. You look at how many permanent closures of businesses that have taken place over the past year or so, there's a lot. They've progressed from temporary closures to actual closures because we can't afford to keep them open any longer. Take a look at the S&P 500's earnings. They have significantly dropped. Take a look at the upper right-hand corner of the graph. So businesses, aka stocks, are earning less money. But as we talked about earlier, they're selling for higher prices. The price of S&P 500 stocks is well above what it was a year or 2 years ago. As a result, higher prices means lower earnings, lower production, and more firm closures. Another factor to examine is the history of stock market crashes. Market crashes have occurred about every 10 years on average throughout history. Now, this is an average, and it's not like as soon as the 10-year mark hits, the market crashes. Sometimes it's 8 years, sometimes it's longer. 13 years, it doesn't matter. The average is 10 years. The most recent major market crisis occurred in 2008. In 2020, there was a 30% drop, but it recovered in a few months. Some investors believe we are due to a true market crash. As a result, Buffett has made some unusual sales, but he's also made some strategic purchases targeted at a certain industry. And as we all know, Buffett recently sold 11 stocks while also buying 9. So the first thing he bought was Restoration Hardware, but it was only a small amount. Second, he bought Chevron. He added 9.5% his position here. The American pharmaceutical company Bristol Myers Squibb is the third. He increased his position by 11%. He added to his job at AbbVie, the pharmaceutical company. He also added to Marsha & McLennan's insurance business. Berkshire Hathaway, a pharmaceutical firm, increased their stake by 28%. He also raised his holdings in Kroger stock. And lastly, T-Mobile and Verizon. He increased his holding in these telecom companies by almost 100%. Pharmaceutical corporations are responsible for creating vaccinations that will benefit billions of people. They are the ones who make the medications and, at the very least, the so-called answers. In the new world, pharmaceuticals is a terrific investment for Buffett. He also made significant investments in the telecommunication business this quarter. His primary choices were T-Mobile and Verizon. Let's face it, the internet is increasingly dominating the globe. So why not become a company owner that provide internet access? Companies like Verizon and T-Mobile are benefiting from this transformation. With all of the Zoom meetings instead of real-life meetings, with work from your computer instead of work from an office. As a result, Buffett is playing the game well. He's sold several of his bank investments, which may struggle in current times, as well as a variety of other firms. He's also wisely invested in pharmaceuticals and telecommunication stocks. As a result, he's chosen specific industries to expand into. But there's no doubt that the fact that he's done so much selling in the last quarter should stand out the most to us investors. So what have you learned from Warren Buffett's scary reasons for selling his stocks? Please let me know in the comment section below, and if you like this video, please give it a thumbs up. Turn on the notification bell and subscribe to our channel for more. Thank you for taking the time to watch. Stay tuned for our next video.